Here is a summary of Micron Technology's fiscal third quarter 2025 earnings call, focusing on key financial metrics, management forecasts, risks, highlights, and important statements. Micron Technology fiscal third quarter 2025 earnings call summary. Good afternoon, everyone. Today, we'll summarize Micron Technology's strong fiscal third quarter 2025 results and discuss their outlook. Financial highlights and performance. Micron achieved record revenue in fiscal Q3, exceeding the high end of their guidance. Total revenue, $9.3 billion, a 15% sequential increase and a 37% year-over-year increase, setting a new quarterly record. DRAM revenue, $7.1 billion, representing 76% of total revenue, up 15% sequentially and 51% year-over-year. This growth was driven by strong performance in HBM and high-capacity DIMMs. NAND revenue, $2.2 billion, representing 23% of total revenue, up 16% sequentially and 4% year-over-year. Gross margin, 39%, up 110 basis points sequentially and exceeding the high end of guidance. This improvement was primarily due to better pricing in both DRAM and NAND, slightly offset by a higher consumer-oriented revenue mix. Operating income, $2.5 billion, resulting in a 26.8% operating margin, up 190 basis points sequentially. Non-GAAP diluted earnings per share, EPS $1.91, also above the high end of guidance, showing 22% sequential growth and over 200% growth year-over-year. Free cash flow, over $1.9 billion, the highest quarterly amount in over 6 years, demonstrating strong operational performance even with strategic investments. Key business segment performance. Compute and networking. Revenue of $5.1 billion, up 11% sequentially, driven by a nearly 50% increase in HBM and growth in high-capacity and low-power server DRAM. Mobile. Revenue of $1.6 billion, up 45% sequentially, attributed to reduced customer inventories and strong demand driven by DRAM content growth. Storage. Revenue of $1.5 billion, up 4% sequentially, mainly from consumer-oriented revenue. Embedded. Revenue of $1.2 billion, up 20% sequentially, supported by growth in industrial and consumer embedded markets. Management's forecast and outlook. Micron is highly optimistic about the upcoming fiscal fourth quarter and the remainder of calendar 2025. Fiscal Q4 revenue guidance, expected to be $10.7 billion, plus or minus $300 million. This represents a significant sequential growth of approximately 15%. Fiscal Q4 gross margin guidance, projected to be in the range of 42%, plus or minus 100 basis points. Fiscal Q4 operating expenses, expected to be approximately $1.2 billion. Fiscal Q4 EPS guidance, expected to be $2.50 per share, plus or minus 15 cents. Calendar 2025 industry demand. Anticipated DRAM bit demand growth in the high teens percentage range and NAND bit demand growth in the low double-digit percentage range. Micron's bit supply growth, expected to be below industry bit demand growth for non-HBM DRAM and NAND. Inventory levels. Customer inventory levels are healthy across end markets, and Micron expects to exit fiscal 2025 with tight DRAM inventories and significantly reduced NAND inventories. Significant risk factors. Macroeconomic conditions. The company remains agile to adjust to any unforeseen demand changes due to macro conditions. Tariff-related situation. While customers may have pulled in some orders due to tariffs, the impact is considered relatively modest. Competitive landscape. While not explicitly detailed as a risk in the provided text, the highly competitive nature of the semiconductor industry is an inherent factor. Supply chain disruptions. Although not a prominent theme in this transcript, global supply chain stability is always a consideration. Highlights of the quarter: record revenue and profitability. Strong execution led to record revenue, gross margin, and EPS, all exceeding guidance. Data center strength. Data center revenue more than doubled year over year, reaching a record level, with HBM revenue growing nearly 50% sequentially. HBM leadership. Micron is the sole supplier in volume production of DRAM in the data center. They are executing well on their HBM ramp, with HBM3E12 high progressing extremely well and expected to achieve shipment crossover in FQ4. HBM4 samples have been delivered, with volume production expected in calendar 2026. Micron anticipates reaching HBM market share similar to their overall DRAM share in the second half of calendar 2025. NAND market share gains. Achieved a new quarterly record for market share in both data center SSDs and client SSDs in calendar Q1. Micron became the number 2 brand by share in data center SSDs for the first time. Technology advancements. Excellent progress on the 1-gamma DRAM technology node, with yields ramping ahead of the 1-beta node. This technology offers significant improvements in bit density, power consumption, and performance. Strategic reorganization. Business units were reorganized around key market segments to capitalize on AI growth, enhancing customer engagement for AI-focused opportunities. U.S. investment plans. Announced significant investment plans in the U.S., including building a second leading-edge memory fab in Boise, Idaho, and expanding existing facilities. Positive demand environment. Customers continue to signal a constructive demand environment for the remainder of the calendar year, driven by AI, automotive, industrial, and recovering PC and mobile markets. Lowlights, or areas of focus/concern: D4 and LP4 product end-of-life. EOL Micron has sent EOL notices for D4 and LP4 products, which are largely produced on the 1-alpha DRAM node. While they will support longevity customers, high-volume segment customers are starting to experience shortages, leading to allocation for these products. D4 revenues are a low single-digit percentage of total revenue for the second half of fiscal 2025. NAND utilization. While leading-edge NAND is fully utilized, part of the NAND capacity continues to remain underutilized, although this is improving with node transitions. Most important statements from CEO and CFO. Sanjay Mehrotra, Chairman, President, and CEO. Micron's strong competitive position and solid execution delivered record revenue in fiscal Q3, with revenue, gross margin, and EPS all exceeding the high end of our guidance ranges. Data center revenue more than doubled year over year and reached a record level, and consumer-oriented markets had strong sequential growth. We are making excellent progress on our 1-gamma DRAM technology node, with yields ramping ahead of the record pace we achieved on our 1-beta node. As high-performance memory and storage becomes increasingly critical to enabling AI-driven innovation, this new structure, business unit reorganization, enhances Micron's ability to engage more deeply with customers by shifting more resources to AI-focused opportunities across our portfolio. As AI drives unprecedented demand for high-performance memory and storage, Micron is exceptionally well positioned to capitalize on this transformative era. We are on track to deliver record revenue with solid profitability and free cash flow in fiscal year 2025, while we invest to build on our leadership to address growing AI-driven memory demand. Mark Murphy, CFO. Micron delivered strong results in fiscal Q3 with revenue, gross margin, and EPS all above the high end of the guidance ranges provided in our last earnings call. Total fiscal Q3 revenue was $9.3 billion, up 15% sequentially, and up 37% year over year, and a quarterly revenue record for Micron. The consolidated gross margin for fiscal Q3 was 39%, up 110 basis points sequentially, and up 250 basis points versus the midpoint of our guidance. We expect our revenue growth to be weighted towards DRAM, supported by robust pricing execution, favorable product mix, and continued cost improvements, all of which benefit gross margins. With all these factors in mind, our non-GAAP guidance for fiscal Q4 is as follows. We expect revenue to be $10.7 billion, plus or minus $300 million, gross margin to be in the range of 42%, plus or minus 100 basis points, and EPS to be $2.50 per share, plus or minus 15 cents. With low inventories on hand and a constructive demand environment, we will continue to focus on improving pricing and further strengthening our product mix. In conclusion, Micron delivered an exceptionally strong fiscal Q3, marked by record financial performance, significant growth in critical segments like data center and HBM, and clear strategic initiatives to capitalize on the AI boom. The company is well positioned for continued growth, with robust demand signals and technological leadership driving their outlook for fiscal Q4 and beyond, while managing product transitions and investing for the future.